Hello friends, in the series on the income tax cases, today we will discuss a case which shows the difference between exemption and deduction as far as the matter of setting off of loss from one source to another source of income under the same head is concerned. The name of the case is Principal Commissioner of Income Tax versus SANDVIK Asia Private Limited, and this case has been reported in 449 ITR at page number 312, and the matter has been decided by Bombay High Court. The date of the judgment is 8th September 2022 and the assessment year involved is 2005-06. In this case, the facts of the case are like this. The assessee was claiming the deduction under section 10B, and if we read section 10B verbatim, then it shows that section 10B is a deduction and not an exemption. And there is no provision in section 10B that an undertaking who is claiming the deduction under section 10B cannot claim the loss of this unit with the income of other source under the same head. And there is no indication in the provision itself that there was such intention of the legislature in framing section 10B. But in this case, the assessee incurred loss and set off this loss from the income of the another source under the same head. But the learned assessing officer was of the view that since the assessee was claiming the deduction, so the loss cannot be set off. As we know that in case of exempt incomes, the expenses related to the exempt income cannot be claimed as expenses, or the incomes which are exempt, if the loss happens from that source, that loss cannot be set off. But this is not applicable as far as the deduction is concerned. So when this matter travelled up to the Bombay High Court, the Bombay High Court categorically said that there is a basic distinction between exemption and deduction. And if the assessee is claiming deduction from any income and in any particular year, if any loss happens from that source, that loss can be set off from the other source under the same head of income. So this matter was concluded by the Bombay High Court. In this case, there were one more matter. The assessee has claimed expenses regarding obsolescence of stock amounting to rupees 19.5 lakh near about. The learned assessing officer said that the assessee was valuing the stock under cost or market value, whichever is less, so this loss cannot be set off. So it was the opinion of the ITAT that since the value of the stock has declined because the stock has become obsolete, so the assessee is well within the four corners of law for claiming this obsolescence of stock as a revenue expenditure into its books of accounts. In this case, another matter was there. The assessee paid some consultancy expenses to a company S in Sweden, and this company was associated company. The allegation of the learned assessing officer was that this company has not provided any services to the assessee and this is on paper transaction. But the assessee substantiated its point before the CIT appeal with due evidence, and the CIT appeal said that there is nothing on record by the department that the services has not been received by the assessee from the Sweden company. So the CIT appeal also allowed this expense of consultancy expenses. The matter came to the ITAT. ITAT also upheld the order of the CIT appeal, and eventually the High Court also upheld the order of the ITAT and said that there was no perversity in the order of either the CIT appeal or the ITAT in giving relief to the assessee. So in this case, there were three matters. First of all, the losses of a unit which is claiming deduction under section 10B can be set off from other source under the same head. The assessee can claim the expense of obsolescence of stock value, and thirdly, the assessee can claim the expenditure of consultancy paid to even an associated company if it has duly received the services from that associate concerned. At the end of this video, once again I am repeating the name of the case. The name of the case is Principal Commissioner of Income Tax versus SANDVIK Asia Private Limited, and the date of the judgment is 4/48 September 2022, and the matter has been reported in 449 ITR at page number 312. Thank you, friends.